I'm happy. Very happy we have connection. So, Jella, she's the president of Better Finance, will speak about transition investing and so on.
Oh. Well, ladies and gentlemen, thank you very much for being here. Thank you very much to Paolo Brambilla for having me here. Is that okay? Great. Does it work?
The both of them, because this is Slovenian.
Ah, okay. Okay, now that we solved all the technical problems and I have two microphones, everything is great. Thank you very much for having me here. I'm very honored. And I would like to also say thank you not only to Paolo, but also to the World Federation, to JP, as I learned, Jean-Pierre, it's easier, and Mark, and of course also to all the others like Kasha and Sarah, who were involved in the preparation of this conference. Let me introduce Better Finance to you. This is a European organization seated in Brussels. We represent as members shareholder associations, investor associations, insured associations, and altogether we represent more than 4 million private investors in Europe. And we are very busy in Brussels. As you can imagine, we are now trying to meet all the new EU parliamentarians that just began their office in this term, and there are a lot of new faces that we are getting to meet in Brussels. So that's pretty new parliament and also new commission, which makes our life also a little bit more difficult. And as you can tell from the title of our survey, are also taking care of transition, investing, and engagement. Of course, I will explain you in detail what we mean by this, but maybe let me just comment a little bit. ESG, as you remember, the Green Deal was very much in the focus in Brussels the last EU Commission and the last EU Parliament. Now the member states have different other problems, as you mentioned, that's one of it. And so we are now not talking as much about ESG anymore, but we are talking about the competitiveness of the EU market. I think it is the major for all of us. But nevertheless, we should not forget about ESG because the issue is still there. The Green Deal is still there and it's not accomplished. And there must be a way to finance the Green Deal. And that's why the financial markets and the capital markets are so important. So let me start with this survey. Yes, we, which means the three organizations of Better Finance, You Savers, Italy, French organization and the German organization, we made surveys at our organizations. Remember that, for example, our organization in Germany, we have more than 30,000 members, mainly private investors. And we tried to find out what they think about transition plans and transition investing. And of course, before I start the survey, I should tell you a little bit about what is transition plan. Well, the transition plan is actually the company plan to change the climate. It's a strategy to achieve climate neutrality until 2050. And as you remember, with all the listed companies, most of them already have climate plans. They have short-term objectives, mid-term objectives, and long-term objectives. And goal is also, from the investor's point of view, to disclose all the emissions, Scope 1, Scope 2, and Scope 3 emissions. So that is about transition plans. The second question is, and that's from the investor's point of view, that's transition investment. And that's a very important issue because it's different from green investment. You know, I know it also from the German fund industry. They love to invest in green companies, but this doesn't change the current situation. What we need to do is we need to invest in, let's say, dirty companies, the brown companies, to support their transition to become green. And this is what is called transition investing. And a lot of the Jewish funds don't like that because, of course, they want to say we invested green and we sell green products. But now we are very happy that the EU Commission invented this new investment category, which is called transition investing, because it will help us to change the world to less emissions. Maybe I take the example of this German company, which is a utility company called RWE. In former times, they had mainly nuclear plants. They had a lot of coal and all of this, but now they are really on their way to the transition to a green company. So, of course, they also need money for this transition, and that's the main goal, actually, of this transition investing. So, let's have a look at the general meeting season in Europe. This is taken from a presentation of George. And if we take a look at the figures, and it's interesting to see, Mark, that most of the say on climate votes are actually from the UK and from France. And to be very honest, in Germany we had just one because it's not a law, it is voluntary, and so it's not as popular right now. But if we take a look at those all proposals where say on climate was on the agenda, we see that in 2022 there were 36 of these board proposals, and in 23, 24, and this season only 22 of these proposals. So we see a decline in these proposals, which does not mean that it's not as high on the agenda, because you do not have to vote on these proposals each and every year. And if you take a look at the average level of support on these say on climate votes, you can see the support even increased a little bit, from the 91% to the 92.6%. So what are the trends with respect to say on climate votes? And that's very important. When we take a look at the say on climate votes, we have first of all the vote on the climate transition plan, and then secondly there is the progress report, which is even more important, because first of all you need a vote on the climate plan, but then you have to take a look whether the company really complies with what they publish as an objective, and that's the progress report, which is really very important. If you take a look at the climate transition plans, you see that it has lowered over the last 3 years. And if you take a look at the environment and social shareholder proposals, again, you see a decrease in these support proposals in this year compared to 23 and 22. So let's come to our survey, which is done by several members of Better Finance. And we just wanted to find out, what do investors, retail investors, think about transition plans? What do they think about transition investing? Numerous studies have showed that there is a clear link between a successful transition to a net zero objective and effective shareholder engagement, which in our view is very important. But as you know from our recent studies on shareholder rights, there are still a lot of obstacles, for example, with regard to cross-border exercise of shareholder rights, which is very, very difficult, even though we have the shareholder rights direct. So, two things we asked were the transition investing and the transition plans. Let me start with the survey and the key figures and trends we were finding out. The first question was, are you aware of what transition investing, transition plans mean. And as you can see, let's say the positive outcome is that the majority of the respondents felt familiar with the transition investing concept and with the transition plan. Nevertheless, if you take a look at the figures, there is still a third of all the respondents that is still not aware of these terms, the meaning of these terms, which means there is still a lot to do. Another question was, is it okay?
Okay. The next.
Is it okay? Great.
Sorry.
Technical assistance. Have you come across any proposals to be voted on, say, on climate or any climate-related shareholder resolutions during the general meeting? There you see it's only rarely, regularly the case, but yes, once or twice we find it. Yes. Yeah. Should I go back once?
Okay.
Thank you. So you see, it's only a minority. And yes, we are familiar with the transition investing concept. That's 34%. And also with transition plans, we have 32%. So this is still a majority, to be honest. And nevertheless, we have that problem. There's still a third that is not aware of what is going on. So this is the next slide. Say on climate resolution during the general meeting. And here we can see that even if the respondents do not add, say, on climate proposals on their agenda, they still think that it is important. The issue is important to have a say on climate, and that is, I think, a very interesting outcome. And as I said, in Germany, we just had one company, which is the GEA company, which had the say on climate on their agenda with very high support of the general meeting, but is still not yet the standard in Germany. So, we also asked, have you come across any proposals, resolutions, or agenda items regarding transition plans? And here again, we had only 24% that saw once or twice such resolutions on the agenda. Again, a lot of them said 46%. Yes, but transition, in our view, is important and maybe interesting also for the other side. We still have 19% that believe transition topics are not as important. So we should also take this into consideration. Then we asked for several scenarios. We had 3 scenarios that we asked for. Scenario 1 was if the company puts climate-related resolution on the agenda and you vote in favor, what did the company provide that you really vote with yes? And here it's interesting to see what the investor really expects. The investor expects a clear commitment to a transition from a heavily polluting company to a green company. They also expect clearly stipulated transition plans and climate strategies, and they also expect a clear alignment with scientific recommendations. So I think this is also something companies should take into consideration once they put such a say on climate on their agenda. Scenario 2 was the company puts climate-related resolutions on their agenda and the investor voted with no. And we asked, why did you vote not in favor? And that's something we really quite often investors say the whole resolution transition was too complicated. We didn't understand it. That's one of the key issues we always find in Brussels whenever we talk about these issues. And we always say, keep it short and simple so that the investor can really understand it. And of course, climate transition is something complex, no doubt about it. But towards the investor, it should be made clear and transparent in an easy way, in an understandable way. If not, it doesn't help, and then there is the danger that the investors will vote with no. We also covered a third scenario. Have not come across any proposal or action regarding climate resolutions in your general meeting. What do you prefer? And we have a large majority of 58% to see the topic brought up more frequently and also explained in a more simple way. And more than a third say that they do not see a change and it's not sure how the climate transition is really related. So, we also had a look, interesting enough, Paulo, to find out what is the difference in on the respondents side. So we had a look at who is experienced, who is not experienced, the retail investor, and here you see Italy and Germany, because for France the figures are not that clear. That's why we just have these figures. And as you can see in the statistics, obviously German retail investors think of them as experienced. And the Italians not as much. And but this is actually very typical also for our organization. We represent investors that believe they are highly sophisticated in investment education. Probably it's true because we have quite high average in the age. So it's very possible that they have very qualified financial education. So, yeah, here are the single questions on the difference between experienced and inexperienced respondents. I don't want to go too much into detail here. I think the interesting outcome is that at the end, when we analyzed the experience, the unexperienced investor, the difference was actually not that great. So that's so let me summarize the whole survey. What the survey of Better Finance clearly shows is that there is a need for improved communication from the company's side. They should really deliver good explanations, understandable explanations, and discuss climate resolutions as often as possible in the general meeting. It also shows, as we always say, the growing importance of transparency and corporate commitment to the climate challenges. So once you really publish your climate objectives, you should follow them and you should regularly be transparent whether you reached the progress you announced or not, because that's very important for your own credibility. You know, people only believe and trust you if you deliver what you tell before. Yes, and the difference between experienced and non-experienced retail investors is not as large as we thought. And at the end, it's all about engagement, which is very important. And effective engagement is the way to go, especially for the investors. Here I am. It's institutional investors, but of course, it's also about retail investment. So I can only say we need more shareholder engagement to support the whole process of the transition investing, which is still something which is not on the daily agenda. Thank you very much.